Test 1, 2, 3. Okay, good. Let's get started. Tesla stock is up 4.5%. Dow Jones is up 0.8%. Nasdaq is up 1%. S&P 500 up 0.9%. Russell 2000 up 0.9%. It's basically a reversal of the day yesterday. Tesla is up. Nvidia is up too, and a couple of the other Mac 7 are up. It's very low volume type of day, quiet. I think the markets are waiting for the Fed's decision in about 2 hours. We're going to start early, and then we're going to end early today. This morning, we had the MBA mortgage applications index come in at 6% lower than the week before. It's a very volatile index, but generally speaking, the demand for housing remains very low. Multi-decade lows, so not much of a change there. 10-year Treasury yield going into the Fed meeting is 4.30%, up 2 basis points from yesterday. 5-year Treasury yield is at 4.11%. 30-year is close to 4.6%. So 30-year has remained high. Crude oil is at $67 per barrel. And markets are waiting. So let's read this article from Reuters. Wall Street gains with all eyes on Fed rate decision. Wall Street's main indices rose on Wednesday ahead of the Fed's widely anticipated monetary policy decision at a time when worries linger about trade policies and their impact on the economy. The central bank is expected to leave its benchmark overnight interest rate unchanged in the 4.25 to 4.5 range when it releases policy statement at 2 p.m. Eastern. Traders see the Fed lowering borrowing costs by at least 2 25 basis point cuts by December, with the first one expected in July, according to data compiled by LSEG. Actually, that was before June, so let's see if it has actually shifted to July. So for May, there's a 16% probability priced in for a cut. For June, yeah, it actually looks still June. I don't know why they're saying July. That doesn't, I think that's wrong for the article. In June, markets expect a 60% probability of a 25 basis point, actually 51% probability of a 25 basis point cut, and an 8% probability of a 50 basis point cut is priced in right now for June. So that article is, I think, wrong. Okay. Focus will be on new economic projections from policymakers that will give an idea of how they will feel Trump's policies will affect economic growth, inflation, and unemployment. Jerome is scheduled to speak later in the day. The Fed is facing the same uncertainty that market participants are in terms of how tariffs are actually going to play out, say Jordan Rizzuto, Chief Investment Officer at Gamma Road Capital. European Union will tighten steel import quotas to reduce inflows by a further 15% from April, a senior EU official said, in a move aimed at preventing cheap steel flooding the European market after Washington imposed new tariffs. So that's another step in tariff war escalation. I didn't really see that reported anywhere else. That's interesting. Boeing shares jumped 6% after aircraft maker said it doesn't see a near-term impact from tariffs. Interesting. Shares are up 6% in the last 5 days, up 8%, down 8% in the past month, and up 11% in the past 6 months. Interesting. Okay. Analysts have said the markets are now awaiting Trump's announcements regarding reciprocal trade barriers on April 1. 8 of the 11 sectors rose, led by a 0.8% gain in consumer discretionary stocks. U.S. stocks have come under severe selling pressure in the recent weeks after a raft of economic indicators signaled a cooling of the U.S. economy amid trade policy uncertainties. Multiple companies have also lowered their annual forecasts, the latest being General Mills. The Pillsbury owner lowered its annual sales outlook, sending its shares down 3.5%. Interesting. Let's see, General Mills stock. It's now down 2%, down 21% in the past 6 months, and generally lower since May of 2023, down about 35% since May of 2023. General Mills is an American multinational manufacturer and marketer of branded processed consumer foods sold through retail stores. $18 billion revenue company, 34,000 employees. The headlines say General Mills Q3 earnings beat estimates, but weak guidance drives shares lower. General Mills is cutting its sales forecast. Let's see why that is. General Mills Q3 revenue falls 5%. Wow. Yeah, this is interesting. This is interesting. So let's take some notes here. So this came out March 19. In its fiscal third quarter report, General Mills. So by the way, first let's look at when this quarter ended. This quarter ended February 28th. Okay. So quarter ended February 28th. General Mills. Reduced its sales forecast, now expecting net sales to decline by as much as 2%. Interesting. Cut sales outlook to negative 2%. I may pull up the company announcement on this one to see if there's more color on here. Let's put that aside for a second. General Mills Q3 revenue falls 5%. Q3 revenue stood at $4.8 billion, down from $5.1 billion, marking a 5% decrease. Adjusted EPS fell by 15% to $1, driven by lower operating profits and higher effective tax rates. Okay, so driven by lower operating profit. Gross margin improved slightly to 33.9% due to cost-saving measures despite inflationary pressures. Consumer food manufacturing giant General Mills reported mixed fiscal 2025 third quarter earnings on Wednesday, March 19. Revenue of $4.8 billion fell short of analyst consensus estimates of $4.96 billion and was down 5% year over year. Okay, so not only they lowered their outlook, also Q3, fiscal Q3, down 5% year over year. Yeah, that's really interesting. This was primarily due to retailer inventory reductions, slow snack sales, and foreign currency challenges. Adjusted EPS fell 15% year over year. Overall, the quarter suggested financial pressures, and the company lowered its guidance for the remainder of the fiscal year. General Mills is a major player in the global consumer food industry, managing over 100 brands in 100 countries. Its portfolio includes various consumer favorites in the categories of snacks, cereals, pet foods. A key focus for the firm is leveraging its brands to reach a wider consumer base, maintaining strong customer loyalty, and drive innovation. Strategic joint ventures, such as those with Nestle in the cereal sector, support its international footprint. The company's growth strategy involves ongoing investment in product innovation and marketing to remain competitive. We're going to skip the marketing talk. Notable challenges in Q3 with sales down across several segments. North America retail experienced a 7% net sales drop. So the 5% year over year is global. And North America fiscal quarter three ended Feb 25 down 7% year over year. Interesting. While North America pet saw an operating profit decrease of 20%. Meanwhile, international segment sales fell by 4%, largely due to unfavorable currency impacts. Despite these losses, North America food service segment exhibited resilience, with sales ticking up by 1%. Food service. Okay, that's another segment. Decline in operating profit was exacerbated by lower gross profit and elevated SG&A expenses. The company's reported operating profit decreased to $891 million, down 2% year over year, while its adjusted operating profit dropped 12% in constant currency. Wow. Yeah, that's massive. So this is really weird because in the beginning they said something about foreign currency was a challenge, but later in the article it says without foreign currency changes in constant currency, operating profit would have dropped much more than what we see in the headline. So, um, so that's the overall operating profit. Yeah, that's pretty wild. All right, I'm gonna keep the operating profit. I don't know. Let's see. And expenses jumped. Primarily SG&A. Curious why SG&A expense went up in this climate. Anyway, in response to current market conditions, General Mills implemented the holistic margin management. Okay. Strategy which yielded slight improvements in gross margin up 40 basis points. However, rising input costs were an ongoing challenge. The external market environment, including inventory reductions by retailers in key segments, weighed heavily on performance. The external market environment, including inventory reductions by retailers in key segments, weighed heavily on performance. Looking forward, the management acknowledged the impact of supply chain dynamics and committed to addressing these issues to stabilize future sales. Management's focus on cost reductions and strategic initiatives reflects an intention to improve financial stability, blah, blah, blah. Predicts a 1.5 to 2% decline in organic net sales. This is full year guidance. It also expects a 7 to 8% decline in both adjusted operating profit and EPS. Yeah. Okay, cut full year sales outlook. I want to do one more thing here on this one. CEO emphasized that Q3 results fell below expectations due to retailer inventory headwinds and slowed snacking categories. He highlighted improved market share trends in pet, food service, and international segments, alongside gains in U.S. refrigerated dough and hot snacks. Company implemented adjustments to fiscal 2025 guidance. So fiscal 2025 means if this is the fiscal third quarter, this is the year that ends in May. Okay, so they're not expecting a bounce in the last quarter of the year, basically. That's the adjustment here. And plans to increase investments aimed at addressing current headwinds and driving growth into fiscal 2026. This includes industry-leading cost savings through holistic margin management, blah, blah, blah. CFO reported Q3 sales down 5% due to lower pound volume and price mix. So both unit sales and price mix decreased. I mean, this is pretty bad. Alongside inventory challenges, operating profit was $800 million, down 13%. Okay. We talked about the outlook change. Let me see if there's any more details to the financial. North America retail saw a 6% drop in organic net sales with improved trends in refrigerated dough, blah, blah, blah. free cash flow conversion is expected to reach at least 95% of adjusted after-tax earnings for fiscal 2025. Okay. Goldman Sachs analyst questioned input cost inflation increased to 4%. CFO Bruce explained ongoing pressures from ingredient costs, toll manufacturing, and lapping of prior advantageous contracts. Interesting. Max Gumbort, BNP Paribas, inquired about pet industry trends. John Nudi highlighted normalization of the category to pre-pandemic trends and growth in premium segments. Okay. Wells Fargo analyst sought perspective on slow recovery pace of broader food trends. CEO pointed normalization of promotional margin environments with increased investments driving share gains. Okay. Analysts raised concerns about the pace of recovery and effectiveness of the investments, with a slight negative tone reflecting skepticism about sustained improvements. Management maintained a confident tone during prepared remarks, blah, blah, blah. Let's bring up Magic, see if he has any comments on Q1. I just sent you an invite, Magic. Quarter-over-quarter comparison, Q3 adjustments reflected moderate expectations to prior optimism in Q2. Management tone shifted to acknowledge greater external headwinds. Analysts focused on transition from general competitiveness improvements in Q2 to specific concerns of execution and category growth in Q3. Strategic priorities evolved toward increased investment in market, blah, blah, blah. Retail inventory headwinds and competitive pressure in snacking categories, etc. Okay, we talked about that. Final takeaway, we talked about that. Let's take a pause from general. So that's the end of General Mills. I took my notes. We have another 40 minutes to go, and I get a bounce. Magic, how are you? What's on your mind?
Hey. Nothing much. I'm doing pretty well. Positions are doing pretty well. I think I've been net short for a while, so it's been painful. But these last few weeks have been great, so can't complain.
Good. And where do we go from here, you think?
It's a tough one. I didn't think it was going to get this bad this fast. I can tell you that as a bear. But yeah, it looks like Trump and team is kind of talking down the markets on purpose. I don't know. It's hard to read, but it looks like they're focusing more on the bond market. And they've said a few times that they're more focused on the 10-year yield, and because they have to issue a lot of debt, refinance a lot of debt, let's say. So it's going to be really hard to refinance all this debt at these really high interest rates, right? It's going to be extremely painful. So I don't know. Trump likes to bluff a lot. He's a hard person to read. So if you take him at face value right now, he's more focused on the bond market. I don't know at what point of pain in the stock market he's going to reverse, but there is a number. He's obviously not going to tell us, right? So we'll see.
Where do you think the 10-year yield goes from here? Let's say by the end of the week after the Fed meeting, and then by the end of next week, once we get more clarity around tariffs.
Look, that's a fantastic question. I don't know. I usually, like, coming into the year or coming into last year when the 10-year was at 4.8, it was a very easy long the 10-year trade. At this point, we may be closer to fair value. There's a lot of uncertainty. I don't want to give a direction on the 10-year. That, like, when I don't have an opinion on it, I just typically just say, not sure on the 10-year. That is a tough one.
Okay. And what do you think Powell will say today?
Yeah, that's a great one. I mean, that's what I'm saying. There's like the market is freaking out because of uncertainty, and I don't think he's going to leave interest rates. I don't think he's going to change interest rates. He's probably going to just leave them unchanged. I think that's what the market is pricing in. But I mean, I think the market's hoping for some positive words on some inflation figures. So I don't know. It's going to be a lot of uncertainty, I think, just in the future, and people are going to panic. I think the market eventually goes lower. It's going to be closer to the 2022 market, if I had to predict, kind of where you have to sell the rip instead of buying the dip, where every big jump you just offload some of your risk assets. That may be the trade. I mean, we've had 2 years of it going straight up by the dip, completely one direction. So I don't think people understand how far up we've gone in such a short period of time. And there's a lot of room to the downside potentially, right? I don't see AI. AI hasn't paid off in terms of earnings like it was promised. So let's see. With tariffs and a lot of uncertainty, I don't think people are waiting. People are moving capital abroad, if you're seeing, to China and Europe. because their valuations are much more reasonable. So I don't know. I don't know what Trump's end game is, but he kind of has the ball in his court. So we'll see. But yeah.
Okay. Any comments on Tesla's Q1 deliveries, profits, or 2025 outlook?
Yeah, actually, I don't want to switch the subject, but yeah, it is related to Tesla. But there was an article by the Financial Times talking about what some members of Tesla Q have already pointed out a few uh, over the last year or so. It has to do with some funky accounting. I can send over the article to you.
Is this the $1.4 billion a lot to fall through the cracks even for Tesla?
Yes.
Okay.
Yeah.
Well, I don't have a subscription to Financial Times, but let me see what I can see here.
I think you should be able to click through it. I click through. I don't have a subscription either.
Okay. So let's read this real quick. All right. As Tesla's car sales and share price plummet in response to Elon Musk's political and physical stances, we would like to draw readers' attention to something puzzling in the group's accounts. So this was published 4 hours ago. I'm going to pin this article so you all can follow through if you want. This is the, let me see 1 second, discussing Financial Times article. Hey, Magic, did you notice any sort of issues with my sound quality while you were in listener mode?
I didn't personally.
Okay. Okay, great. And please let me know how the sound quality is if you're watching this on YouTube. Seems to be fine on YouTube. All right. So let's read this article together. The article is in the replies if you want to follow through. Tesla's car sales and share price plummet in response to Elon Musk's political and physical stances. Physical stances? What does that mean? What's a physical stance? Like he's fat? Is that what it's talking about?
His arm gesture.
Oh, okay. I got you. We would like to draw readers' attention to something puzzling in the group's accounts. Compare Tesla's capital expenditures in the last 6 months of 2024 to its valuation of the assets that money was spent on, and $1.4 billion appears to have gone astray. Let me just get this right real quick. Capital expenditure in the last 6 months of 2024 to its valuation of the assets that money was spent on. Okay. Okay. The sum is big enough to matter, even at hold on a second. Who fucking wrote this article? Dan McCrum in London and Stephen Morris in San Francisco. Okay. Let me just click through to these authors. Let me just see if there's a history here. Tesla's departure from reality in one chart, a fork in the road for Tesla. So a bunch of Tesla articles. But it's a very small percentage of his overall articles for Dan. Okay, and then Stephen, Financial Bureau Chief in San Francisco. NASA astronauts return to Earth after 9 months stranded in space. He just covered that. And the Alphabet, Tesla launch sharp interest is exposed to Tether. Okay. Nvidia, SpaceX, Microsoft, Lucid, Chief resigns, EV. Okay, Tesla buys assets in insolvent Germany. Okay, seems pretty benign. All right. The sum is big enough to matter, even at Tesla, and comes at a moment when attention is returned to the group's underlying numbers. Now that it's fully diluted, the stock market valuation has crashed from $1.7 trillion to below $800 billion. 1.7 trillion? What the fuck are they talking about? Did the market cap ever get that high? I don't think so.
It might have been 1.4, 1.5. I'm not sure what the total market cap.
Let's see. There's the market cap. So today's, and we were at double 1.4, 1.5. Okay. Wow, I didn't realize it reached that high, to be honest with you. I mean, I don't think it was 1.7, but I guess that was diluted. It could have been 1.7. Okay. Wow, that's crazy. I didn't realize market cap reached that high. Okay. I guess there was one day that when you went out to like 488 or something, right? In intraday. Maybe that's
Yeah.
what.
It just went intraday, like
Right.
488 or probably higher intraday, but yeah.
Right. A closer look at Tesla's cash flow statement may also prompt investors to ask other questions, such as why a business with $37 billion in cash pile raised $6 billion in new debt last year. First, okay, let's look at this. First, consider the apparent anomaly. Tesla is investing heavily, particularly in AI infrastructure. Didn't they? How did they raise $6 billion? Didn't they just securitize receivables or something?
Yeah, I think they securitized their either the receivables. Yeah,
Yeah,
I guess some receivable or lease agreement, something like that. It was
yeah,
some
it's
sort
on
of
the same thing.
securitization.
Yeah, but that's just normal course of business, though. Like that's not like they went to market to raise, senior loan or something.
Well, it's the only thing is it doesn't really quite make sense if you have $36 billion in cash, right? I mean, that seems like you wouldn't do that in the normal course of business unless you have liquidity issues theoretically.
Or unless you expect some sort of receivables, um, issue, meaning like delinquencies rising as they have been over the last year. So it could have been just prudent, and we also don't know the haircut they took, right? I mean, if the haircut is low and they see the risk as higher than what's being priced in the market, then it does make sense. Anyway,
Yeah, no. So really quickly, I mean, I get your point, but I think what I've seen from receivables is they get 80% of the notional value, right? That's like standard practice. Maybe they can get probably 90, right? If the underlying customers
right,
have good credit, but
right.
still, you wouldn't take a 10-20% haircut for no reason, right? I mean,
They're not going to
theoretically.
take 20%.
Yeah.
10%, maybe like 5-10%. I can see if you expect some sort of recession. And the Tesla's credit consumers have higher credit score, just like Mercedes and etc. So I wouldn't. I don't. I can't see they took a 20% haircut. Anyway, first consider apparent anomaly. Tesla is investing heavily, particularly in AI infrastructure. It intends to spend at least $11 billion in each of the next few years, aiming to take advantage of opportunities in robots, computing, and batteries. Looking at last year, in the third and fourth quarter combined, Tesla spent $6.3 billion on purchase of property equipment excluding finance leases, net of sales, according to his cash flow statement. Okay. Over on the balance sheet, however, the gross value of property, plant, and equipment rose by only $4.9 billion in that period to $51 million. Note 7 to the financial statement has the breakdown. Okay. We'd expect the numbers to tally. Okay. These guys are fucking. Hold on a second. Okay, hold on a second. So December 31 to December 31, he says 4.9 billion. So they're looking at the bottom total number, 29.7 to 35.8. Where the fuck is the depreciation, dude? I mean, the difference is the depreciation, right?
It doesn't tie. We've tried to tie it. There's been plenty of threads that it doesn't tie, and then maybe there's some asset impairment, but it always kind of magically ties perfectly. So there's just missing numbers if you try to do the PPE reconciliation, like over the quarters. We've been doing
Oh,
it.
looking
Yeah.
at the last year in the third and fourth quarter combined. So they only look at 2 quarters and then they compare in balance sheet year over year. That doesn't make any sense. That makes no sense. First, there is a period difference. Second, they're not accounting for depreciation. So this is wrong. It's just the analysis is wrong. Anyway, let's continue. We expect the numbers to tally. GM, for instance, spent $30 billion in capex over the past 3 years, disposed of $14 billion of assets. So it reported 16% rise in gross value of property, plant and equipment, etc. Louis Hale, professor of accounting at Wharton, told us that the reason for why the reported numbers will not fully add up in most cases is that we only see changes in these accounts, PP&E and associated accumulated depreciation account, but do not have all the detailed transactions that were going in. Yeah, maybe they sold off some PP&E, and we don't know what that net book value, respective gross amounts were. Other things that will make an exact reconciliation possible: M&A transactions or foreign currency transactions, and also it could be translations too. So in most cases, the capex number will give you a good approximation for the increase in gross PP&E, but there could be other reasons going for why a particular case might not be the case. Yeah, I mean, that's fair. It just doesn't point out the fact that the author is talking about capex in the third and fourth quarter combined, and then comparing December 31 to December 31, which means where is the first and second quarter capex?
Yeah, I mean the main thing I think that we pointed out is that there's asset sales and there's never a gain or loss. So almost every single time that they sell in assets, um, there is no gain or loss. I mean, what's the likelihood that you sell every single asset off your books at exactly book value, right? That's where
Well, you
it
don't
doesn't
you
make any
don't
sense.
know that. You don't know that for a fact if there's no gain or loss.
They don't recognize it on on their statement, the gain or
You don't
loss
you don't you don't have
sales.
the general ledger. You don't know that. They probably are, but the amounts are probably immaterial that you don't even notice. It's not like they're buying equipment for $1 billion and then 5 years later selling for $1 billion. They would be taking out the depreciated amount from the books, and if there's some sort of a few $1 million here and there gain or loss, they would be recognized in some sort of general ledger account. That wouldn't show up in the balance sheet.
Yeah.
Let me look it up.
Okay. I mean, look, we have on top of this, we have plenty of documentation that it doesn't tie. Like it doesn't. Like I'll send it to you. I'll give you $500 if you can tie it. If that's what you want to do. We can't.
I mean, the problem you're going to have is um, so you have the capex numbers, gross capex numbers, and then you have the gross PPN numbers and net PPN numbers, right? And then you have the cumulative depreciation, change of cumulative depreciation. Um, I mean, I can probably come close, but I don't think it's going to tie. It can't. I don't think it's going to tie perfectly because of a couple of the things that this professor mentioned.
Yeah. No, I mean, look, that's why it's convoluted. Some of it just doesn't quite make sense. I'm not telling you it's outright smoking gun,
No,
but that's what I'm telling. And that's what the fact. It's like it's convoluted, but it just some number like the roll forward just kind of doesn't tie, and that's what the financial like they did their homework too. And we've done the math. I don't have the numbers in front of me, but we've done the math too, and it doesn't quite make a lot of sense. So I can post the thread later offline, and I mean, look, dude, yeah, I
yeah,
mean,
post a thread, and I'll look at it,
yeah,
and then I'll see. Let's
okay,
just read this
yeah,
rest of this article. But
okay,
Tesla reports the gross figures and cumulative depreciation, so we can't say how the net figures arrived. It didn't disclose any sales or material asset impairments that would account for the missing 1.4 billion. There's no missing 1.4 billion. We're sure auditors PwC would be alive to the important signals such as declarations of malinvestment would send. Foreign exchange seems unlikely to explain the gap either. Tesla makes cars in US, China, Germany, and while the euro did weaken against the dollar in the periods 4th to 5th, Tesla's longer-lived assets are in America. See note 17 for those reading along. Okay. Um, Tesla's gap is also unusual by its own standards. Here's a chart of capital expenditure on PP&E versus change in gross value of those assets for every quarter since the start of 2019. Above zero. So again, I mean, as you can see here in this graph, it never ties, right? It never ties. What they're pointing out is that this is a historically large number. Comparing capex on PP&E with the gross increase in the value of PP&E. Okay. Asset value rises more than capex, above zero. Asset value rises more than capex. Okay. um, Asset value rises more than. I mean, that makes sense, right? That makes sense, because a growing company. Hard asset question that says comparing capex on PP&E with the gross increase in the value of PP&E quarterly, $1 million. Okay. Um, Plant, property, and equipment. I mean, like one, obviously it can be because of M&A, right? And you wouldn't see that in capex; you would see that in the assets. But it could be foreign exchange. It could be asset write-downs when it's negative, below zero, capex missing.
Yeah, I think it was just isn't property, plant, and equipment carried at cost, right? And then cap. So if I have 5 billion and then I add 3 billion in capex, so that'd be 8 billion. Why would you have 9 billion? What situation would that even happen?
So M&A or foreign exchange, like the professor said.
But you don't market property, plant, and equipment to market. You carry it at cost. So that's why I'm like, who's revaluing this?
Well, I think there could be foreign exchange translation issues,
Yeah.
like for assets in other countries. The reasons for why the reporters will not fully add up in most cases is that we only see net change in accounts, but do not have all the detailed transactions. Maybe they sold off some PP&E, so that would be under. So you're asking 5 billion plus 3 billion. Why would it be 9? And we don't know what that net book value, respective gross amounts, were. Other things that will make an exact reconciliation possible: M&A transaction, foreign currency transactions. Okay. So in most cases, the capex number will give a good approximation, but there could be other reasons going on for why.
And this kind of aligns with their gross margin beat. So mysteriously, there's some expenses that are missing. Mysteriously, PP&E is higher than capex. So it won't. It's not that far of a bridge to cross to say that they may be capitalized some expenses in there.
Well,
That's
so
the suspicion.
if gross PP&E, hold on one second, let me just pull this spreadsheet. One second. Balance sheet. Property, plant, equipment net. And then they show here. Okay. Machinery, equipment, vehicles, and office furniture. Land and buildings. AI infrastructure. Tooling, leasehold improvements, computer, hardware, software, construction in progress. Okay, so the capex number shows up in cash flow statement. I mean, and the purpose why you record capex, let's say you increase PP&E with a debit, and I mean, maybe there are some expenses they don't recognize at capex and depreciate. Maybe they fully expensed it at the beginning. What do you think about that?
I mean, look, all I'm saying is that we have
What
questions.
do you think about what I just said?
Yeah, I mean, it could be. My inclination is that they capitalize expenses. If you want to know what I think they did.
I mean, generally they do, right? But we're talking about these like few differences because I think this is a good question. So let's say, for example, they didn't buy a company to and kind of roll in their assets in a quarter, and there were no foreign translation issues. And we can see in this second graph on the Financial Times article is that like most quarters, the asset value, PP&E, gross PP&E increased more than capex. Okay. By only a couple $100 million, if any. So we're trying to understand why that is. I mean, they are buying businesses all the time, as you know.
I mean, potentially, yeah. I'm not saying it's 100%. I'm just saying, look, there has to be an explanation there, and we're just trying to get to that explanation of how what's going on there. And also, I think just to note that this is Dan McCrum, which he's a pretty prolific author. He actually, if you remember, if you've ever studied the Wirecard situation, I think he was instrumental in that. So he has a pretty good track record. It's not just some
Let
random
me
dude on the internet.
let me read this real quick. Such
Yeah.
anomalies can be red flags, potential indicative of weak internal controls. Aggressive classification of operating expenses as investment can be used to artificially boost reported profits. Tesla did not respond for requested comment. Perhaps the assets will show up next quarter. It's also possible the recent presidential endorsement will boost sales and that some would-be buyers are waiting for up to the Model Y to hit the showrooms. If not, the question of what Tesla is doing with its cash and where the money is held may become more pertinent. Last year, the group generated $15 billion of operating cash flow, invested $11 billion into the business, and didn't pay a dividend or buy back shares. Okay. Yet Tesla also raised a net $3.9 billion new finance on top of $2.6 billion raised in 2023. A combination of excess cash flow and ongoing capital raising is another red flag that can signal accounting misstatements. Blah, blah, blah. I mean, they're really reaching here. He says in those cases, allegedly healthy operating cash flows, etc., etc. Tesla may, of course, opportunity manage its balance sheet, which they are, given its plans for substantial further capital investment. Okay. I mean, the probability of something material being missed by PwC is like 1 in a million. I hope that you do recognize that. PwC is one of the top accounting firms, if not the top accounting firm. And I'm sure there's a reason. And I'm,
Oh,
90% positive that this might be some sort of general ledger account that doesn't roll up or that doesn't show up on the balance sheet in a material way.
yeah,
But
I mean,
I'm
I was
positive.
I was at Deloitte, so I mean, we had more revenue, so I mean, we can measure it any sort of way. But yeah, I mean, look, I think I don't know, maybe your experience is better than mine, but yeah, I don't really have that much faith in audit firms. I've seen how the sausage is made personally, so I mean, auditors are there to provide whatever opinion the client wants. That's how it is. I
That's
don't
not
see it any
that's
other way.
not that's not always true. That's not always true.
That's
Especially with a $2 billion item.
well, the higher the revenue, the higher the more the partners look the other way. That's what I've seen. This billing. If it's the number one billing in the office, you think they're gonna do anything? Like our number one client in our office could like bitch slap me and they won't do anything about it. They don't care. Like they can just roll all over you. So I don't know. I think the dollar amounts are so big that they may justify it in their head. That's my opinion. And also, Yaman, I think there's been a breakdown in the auditing profession as of late. I think when you were an auditor, I think the standards were held much higher. You were an auditor post GFC, right?
yeah.
Post
Yeah.
GFC, and that's where
Something like
people were a
that.
lot more cautious. And this is literally being an auditor in 2020, 21, 22, right? Where shenanigans have happened left and right. So I think you're right. When you were an auditor, it was way tougher because they just came off an insane loss. So they were a lot more stringent about what, after a lot of pain, they're not going to take aggressive accounting policies and the auditors are not going to take on financial risk. But when free money is being printed, as you know, with the dot-com bubble, that's where shortly after the dot-com bubble is when all those accounting frauds, right? Like Enron, WorldCom, they all busted. I think there's a coincidence there, right? Because during a bubble, accounting standards kind of get very loose.
$6.3 billion on personal property equivalent net of sales according to his cash flow statements. Third and fourth. Okay, 6.3. And then if you look at the full year, you have 5 billion, 11.3 or $11.4 billion spent. And then if I come over to the balance sheet, gross increase from 4.7 to 51.4. So that's 9.7, $9.6 billion. Um, Looking at the last year, in the third full quarter, Tesla spent 6.3 billion, and then that's over on the balance sheet. However, the gross property planning company rose by 4.9 billion in that period, $51 billion. I mean, I think that paragraph is wrong. Anyway. AI infrastructure, man, look at that, $5.2 billion of AI infrastructure. That's crazy. Or let's try to come up. We only have 10 minutes left. And I got to bounce. Tooling, lease, accumulated depreciation jumped $3.5 billion. Anyway, I don't really care about the stuff. I think the probability of something material misstatement in the accounting is just extremely low. And Magic, what do you think is the probability of Tesla cooking the books when it comes to issue? Out of 100%, what do you think is the probability? I just want a straight answer.
80%.
Okay, I will bet you a coffee that there will not be a more than $1 billion. I don't think there will be a material misstatement correction when it comes to Note 7. How about that?
I mean, potentially. I mean, we can bet however you want, but I mean, we'll see. I mean, it's not going to be uncovered until the stock price hits a certain level, as we all know. So once the stock price is a certain level, then people are going to start investigating it. But yeah, I mean, like that's my bet. It's hard. It's hard to quantify it, but I've seen enough. I mean, look, Tesla was just accused of in Canada with their sales. I mean, if you divide the amount of sales that they did in Canada for that last day of the
that's different.
special,
that doesn't go through PwC.
No, but what I'm telling you is there's a systematic disregard for rules. There's a systematic culture.
Sorry, I don't have time for this. Okay. Earl?
Well, they cook the books? I don't think so. They might cook the cars, though. What if they're burning the cars? Then they can mark them down as sales because they get insurance money. Got to think outside the box.
Yeah.
How are you doing, man?
I'm good. Just nice. I got to bounce in about 5 minutes. But
okay.
Other than that,
well, I'm glad I got to get the tail end.
Yeah. How you doing?
Doing fine. Still driving my Tesla up here,
Yeah, be careful.
That's fun. Well, nobody cares up here.
Yeah.
Alaska's its own. You're just happy to make it through the day. You don't really care what people drive. But it's funny, my brother lives in like rural Pennsylvania, and he was getting the finger from some trucks with MAGA stuff on them. I'm like, oh, well, like everybody hates us now. Like people on the right and the left hate us. it's fun. It's fun.
Relentless. It's relentless. Yeah. Are you still holding on to your shares, right? You're riding the roller coaster?
Yeah, I'm like really lazy. So I've had them so long. I got them in like almost 10 years ago now. So I wish I'd probably been smarter with selling them, but I'm just hanging in there. It doesn't bother me as much because obviously, I've had them for so long, so I'm okay, But definitely could have played the market better. Could have bought a Rivian,
Yeah.
I do like the car. Still like the car.
Oh, that's good.
I mean, it's no robo-taxi, but it's fun.
Are you using FSD though?
It comes and goes. I get a new update and I try it for a little while, and then it does enough dumb things and it becomes an irritant. And so, like today, I just drove to work. I've been off and on very impressed with it, and then it regresses. Like the one day I was bragging about how good it was, really doing well the whole day. And then I went out that night to pick up my daughter, and it was probably the worst drive I've had in years. Like it was just terrible. It was nighttime. It was not staying within the lines. It was going too slow and then too fast. I'm like, what happened? You could do this 6 hours ago. It made no sense to me. So after that experience, I've just kind of been driving again. But it looks like robotaxis are going to have drivers anyway. So that's hilarious to me.
Yeah. All right. Cool beans. Earl, any thoughts on? I guess the wars are kind of winding down a little bit here with Russia and Ukraine, and I mean Israel got a little kind of out of hand, and I think they bombed and killed a few hundred kids over there.
Mm.
Any thoughts on that?
No.
Yeah,
I feel
Israel just
I feel
ended the
very
ceasefire that was going on.
vulnerable.
They
Like
just end.
it feels unsettling of like who's driving this boat, but I'm
Yeah,
up here, so
yeah, yeah. It's really sad.
Russia's still flying into our airspace and doing dipshit things. So there's no kumbaya yet.
Yeah.
I'm trying to mute, but I can't. It's
Oh, that's okay.
I promise. It's
That's okay.
literally I'm hitting the button.
It's okay. We're gonna end it in a few minutes anyway. I'm just waiting for.
Please stay on mute, Earl.
I'm trying. I know Yaman runs a tight ship, and I'm like, I'm not speaking. I better mute myself, and it won't work. And I'm like sweating now. Oh, Christina Balin's here, and we got a lot of Tesla bears in here, huh?
Yeah, it turned to Tesla Q Live.
Wow.
Yeah, look at that.
I still don't identify as a Tesla bear, even though I'm completely bearish on the stock.
Well, you hold the stock, so you can't be that
I
much of a
told
bear.
you. I mean, I wonder what the price was. I was having the discussion with you, and I said I have no bull case for the stock. I don't know why I'm holding it. It probably went down $100 since then. I should have just
Mhm.
listened to myself. I still don't have a bull case, and I still think it can drop a lot lower. I don't feel like we're at the floor. But I'll be here. I'll be here in like a month talking to you, being like, "Hey, remember it was like 200 something? I didn't sell either." So it's going.
Well,
It's
who
okay.
knows? I don't know. Who knows where the stock price will go in the near term?
No, and
You don't really know.
especially like I've held the stock long enough to watch some bears get their lives destroyed by this stock going up for absolutely
Well,
no
I think it's
reason.
happened.
And
It's happened by both sides, both bulls
yeah,
and bears.
absolutely. Well, you wouldn't know that. They just
Mhm.
tell you to zoom out and buy the dips.
Mhm.
It's a buying opportunity.
And
Thank you
maybe
for the
this.
Nazi salute.
Who knows? Property, plant, and equipment, including leasehold improvements, are recognized in cost list of the cumulative depreciation. Depreciation is generally computed using straight line method over the estimated useful lives as follows: AI infrastructure 5 to 30 years. That's kind of interesting. Leasehold improvements are depreciated on a straight line basis over the estimated useful life. AI infrastructure includes our own data centers. Upon the retirement or sale of our property, plant, and equipment, the costs and associated cumulative depreciation are removed from the consolidated balance sheet, and the resulting gain or loss reflected in the consolidated statement of operations. Maintenance and repair expenditures are expensed as incurred, while major improvements that increase the functionality, output, expected life, and asset capitalized and depreciated ratably over the identified useful life. Yeah. Okay. All right. Well, if anybody has a better answer than what I gave to Magic, you're welcome to leave it in the replies. But I feel like this is one of those questions hard to answer without access to general ledger, and PwC has access to that, so I'm not worried about. I don't think there's any material misstatement going on, but it's something to think about. All right, let's call it a day. Thank you very much, everybody, and I will chat with you all next time. Take care.